Welcome to Profit Talks. I'm Profit. Today's Sunday, May 17th, 2026, and we are back to our regular programming of looking at global events through prediction market lenses. This week we've got quite a lot on our plate, but less than expected because we had quite disappointing China visit. But on top of that, we of course have the Iran war situation, and we've got some new developments in UK politics that just beg to be analyzed through prediction markets. So, without further ado, let's look at Polymarket and see how the state of events look before the China visit, what changed on the visit, and what changed since then. This is especially for the China-related markets as well as the Iran war. And at the end, we'll take a look at some UK markets to understand if we can really expect Keir Starmer to resign, and if so, since when prediction market traders actually had that idea in mind. So when it comes to Trump Xi summit or China summit, we have five markets with different outcomes that were more or less expected out of this meeting. Because usually when leaders of two countries meet, it's done not to discuss something, especially if it's such a highly covered event as Trump Xi meeting, but rather to announce the deal, to shake hands, to pose for a few photos, and to generally have a good win narrative for domestic audience. This was especially expected because during the day that Trump departed the US to China, we also learned that he was bringing with himself several business leaders, CEO of the top US companies. So generally among the traders and the general public, expectations were really high that we will see big deals being announced. We can also see that in the markets because we have soybean purchase, which reached as high as 89% at some point. Announcement of US oil purchase reached 30% at some point. The rare earth issue also was pretty high at 35%. Only, I guess, Iran negotiations were at low before the meeting, only at 17%. But we also have the fifth market of US-China tariff agreement, where expectations were also high with chances of announcement at 74% at the beginning of the meeting. So, as you can see, the expectations were running high among the traders, not only the general public. When we take a look at those markets, we clearly see that traders expected at least two of those five events to happen. So a tariff agreement and the soybean purchase, with other markets being less likely, but still at least likely to be discussed. And pretty soon, when the meeting started, we realized that none of this is actually happening because, as you can see here, soybean purchase, this went down just when it turned down, then Trump is leaving and nothing is being announced. When it comes to oil purchase, it went up slightly on some Trump comments that Xi was interested in buying US oil, but soon after we didn't see any communications from the Chinese government, and the chances started to fall down, and we are now at 6%. We are at 18% when it comes to soybeans, so also extremely low. When it comes to rare earth and Iran negotiations, we are at 5 and 4%. There were no real bounces when it comes to the price. It was pretty much a steady way down for both of these markets. The only spike here, I think, that we see is connected to the joint statement around the Strait of Hormuz. But we saw nothing more than this brief communication from pretty much both governments. And the same trend can be seen on the tariff agreement. There was a first low of 49% just before Trump left. And this is when, for the first time, traders realized that no deal might be announced after all. After all, there was a bounce to 66% as the day started in China, and since then we went a lot lower as the visit didn't really end in any serious press conference. So to sum everything up, what we did see during this visit are two deals, one being the Boeing deal, where China agreed to buy 200 planes. But even this deal is rather a failure because in the market, in the financial market, expectations were that Boeing would sell somewhere around 500 planes. So actually, Boeing shares fell on the news. And the other, let's say, big announcement was NVIDIA selling some chips to Chinese companies. But these are not the best chips they have. And generally, the market consensus is that this sale is supposed to clear the inventory of NVIDIA rather than an announcement of a wider cooperation between the company and the Chinese counterparts. So, summing up the event and what we see on the markets is that a lot was supposed to happen, but nothing really did happen. And we can try and understand why the events took such a turn, but ultimately I think that the general dynamic situation in the world, combined with current US strategy of playing the game of chicken in Iran, resulted in China not really being interested in dealing with the US at this point, at least. It can be that Trump figured he has way more leverage, while Xi figured he will wait and see if the US can actually win in Iran. So both sides were not really in the best strategic positions from their own point of view. But this was something that wasn't really that obvious when we entered the meeting, especially since it was announced quite a while ago, then it was postponed. So the general consensus, both in the media and on the markets, was that since both leaders actually meet, something will be announced. But we are where we are, and we gotta live with it. There is supposedly a next visit in preparation. This time, Xi is supposed to visit Washington, D.C. This will happen somewhere, I think in September or October. That's the approximate time that was given to us. But since this meeting didn't really bring a lot of progress or any progress, I think the next meeting will heavily depend on what happens in Iran, what happens in Cuba, and also probably what happens with Russia in the Ukraine war. As the one thing that we did see, which is interesting, is that Putin is supposed to visit Beijing really soon, probably to talk about the details of the summit with Xi and to align on the next steps moving forward. So maybe after this meeting, we will see not like announcements but actions by the Chinese and Russian governments that will tell us more on what actually went wrong. But ultimately, here we are, and now let's take a look at Iran war markets. I think we have three interesting markets to analyze because separately they tell us quite a compelling story, but together they present the whole picture of what is the current forecast of events for the next 2-3 months or so. So first up, we have a permanent peace deal between the US and Iran. And here we can see that the chances are probably the lowest ever at this point. So we have only 9% chance we will see a deal by the end of the month, 16% chance we will see it by June 15th, only 27% we will see a deal by the end of June, which is also, I think, the lowest level ever. 34% till end of July. This is a new market, but pretty aligned with the rest. And only 65% will see one by the end of the year. So what it tells us is that we had a series of pretty bullish announcements recently, especially the week before the China summit. There are two sides were supposedly very close to a one-page MOU on ending the war. From my understanding, the MOU was really soft. And I think this is also the consensus of the traders, because we saw a move from 13% chance of a deal up to 40% chance. 43% chance at some point. But pretty soon after, Iran was really stalling with giving a response to the proposal. Then they rejected it. Trump rejected it. Then he was busy with the China visit, and ever since then we didn't really have any serious news about peace being negotiated. There was some hope that the China visit would streamline some of the progress, that China would get somehow involved into the whole quagmire and probably help the US a bit in reaching good terms with Iran, but nothing of sorts happened. As you can see, as the China visit started, we had 11% chance of a deal, and 17, sorry. And this went only lower when the meeting started and there was no serious announcement being made. As you can see, during the last week, the chances were pretty flat, slightly down, and we continue on this trajectory at least till tomorrow market open, when some kind of narrative probably needs to appear for oil to not shoot up because of the Strait of Hormuz closure. All the other markets, they have a very similar trend. When you look at the end of June, the chances went also lower. And here we are. There is no real prospect of a deal being done. I think after like 4 or 5 cycles of deal announcements, the market understands that even now, both sides are pretty far apart when it comes to acceptable terms. But interestingly, when we look at the other markets, because this is already an interesting piece of news, but when we look at some other markets, it gives us a clearer picture of what is actually happening. So when we take a look at the market of Iran closes its airspace by, which is pretty much a proxy market for a resumption of hostilities, because Iran will decide to fully close its airspace only in case missiles are flying back and forth. So what we see here is that there's also only 36% chance we will see airspace closure by the end of the month. So combined with 9% chance we will see a peace deal, it gives us like 55% chance of just nothing. So at least for the short term, the consensus of the market, I would say, is a stalemate situation being continued. So a double blockade, no agreement, but also no war, just a game of chicken being continued for the short term at least. When we look at end of June markets, the situation is a bit different. There is 56% chance of airspace closure and 27% of a peace deal being announced. So expectation is that the situation can change by the end of June. But also at the same time, we need to understand that the closer we get to the given dates, the more clarity we'll also get. So for now, traders see that in the medium term, so by the end of June, short term was by the end of May, in the medium term, something probably needs to give because of the Strait of Hormuz closure, and they see the highest probability, at least for now, for some kind of resumption of hostilities. This is also on the back of the assessment that for now, both sides are too far apart to reach an agreement. And additionally, based on the rumors we got from the CIA report, Iran is economically ready to sustain the blockade for at least a few months. So considering that this game of chicken would need to be played for quite a while to actually force either side into concessions, the current expectation of the market is that the resumption of hostilities is the most likely scenario, but only sitting at 56%, so it's barely above a coin flip chance. There is a good chance we will see no resumption of war at all, and just a continuation of the stalemate or a peace deal. So I think these markets here are especially interesting to analyze in tandem. So these two, they give us a pretty good idea of what are the chances of war versus peace versus a stalemate. We don't need a fair market for that because these are pretty much the only options we have. Because even in the case of like limited decapitation strikes, for example, that the US can do on Iran, the airspace would also close, and this would count as resumption of hostilities. So here we are, and that's the current state of play. Then when we look also at the Strait of Hormuz normalization market, the situation is also getting additional information. We also get additional information. So what we see now is that there is only 5% chance we will see a normalization of traffic by the end of the month, which is extremely low considering that the normalization is treated as 60 or more ships a day during a 7-day period, which is around like 55% of like normal traffic that went through the Strait before the war. When we look at longer dated markets, the situation is pretty similar. So we got 28% chance and going lower of normalization by end of June, and 43% chance of normalization by the end of July. So looking at those three markets together, we can also understand that be it a stalemate or be it war, which are two most likely scenarios, one the latter in the short term and the former in the longer term, we shouldn't really expect the Strait to open up. So in stalemate, it's obvious because we got the double blockade, and we now know that both countries can sustain it for quite a while, for at least a few months. In case of a resumption of war, this is also kind of understandable, but less, because at least in theory, a resumption of hostilities can result in a strategic situation, strategic landscape, changing the respective position, being more aligned. But even in that case, there's really not a lot of chance that we will see the whole situation resolved. I think I'll take at least one video in the near future to actually go over some of the markets that can show us what can be the consequences of this situation, especially the Strait of Hormuz closure, so we can analyze how the markets move in the wider context. But at least for now, I think this is the one important information that you can get from the markets, which is that in the short term, it is a stalemate. In the longer term, there is some chance of strikes resuming, but generally the tendency is that the closer we move to resolution date, the higher the chances will be that the stalemate will just continue. Because if in the short term military action is not likely, something would need to change in this time for the military action to be more likely in this medium term. I hope you do understand me here. What I'm like trying to say on naked numbers is that as we move closer to the end of June, the chances of a deal should drop without any bullish announcements. Chances of airspace closure with no military action should also drop, and by design, this would mean that the stalemate is continuing. All right, I think that's enough on Iran war. If you want to read more about this, I have a deep dive that I'm preparing now that I will publish on Tuesday probably, that I will go through some of the scenarios on what can happen in the medium term. So go on profitknows.com and subscribe so you don't miss it. Other than that, let's just move to UK politics. Let's leave Iran for a bit, as it's been already in our minds for over 2 months now. So, moving to UK politics, what we have here is a quite interesting situation for Keir Starmer, because looking like backwards, what we can see here is that traders pretty much expected Starmer to be out by the end of the year for quite some time. As you can see here, at least from mid-November, when we look at end of June, we can probably say the same thing. There was like 40-something% chance, even from September, October, that Keir Starmer will be out by the end of June. The reason here is pretty simple. It's because Labour Party is facing several difficulties. They are not really good in pushing their agenda forward. There is a lot of hate on the UK in relation to their free speech restrictions. There is also the increasing problem of migrants, and resulting from that, there are two parties on the right wing that see a lot of increase in voters wanting to vote for them. Pardon my English. Generally, a right wing is on the rise in the UK, and some of the people inside the Labour Party feel that a change of leadership and somehow a change of agenda might help Labour might help Labour be stronger. When we look at the markets, we can see that the real crisis for Starmer started back in February. This is also when the famous British photo of a troubled politician in a car went live, and it's a clear indication in UK politics that the person of interest is facing a lot of issues. So this was the first time it happened, and ever since then the chances were elevated. And since then, pretty much nothing good happened for Keir Starmer, because Labour has been losing local elections and by-elections to the right wing. There is a problem with migrants. There is also the Iran war situation, which surely doesn't help anyone that's in power right now. So there is an increasing pressure on Starmer to go out. And during this week, we also had a resignation from his cabinet. So Wes Streeting resigned and also generally called for Starmer's resignation. He also announced that he will be looking to take the spot when Starmer resigns. So, as you can see, there was quite a roller coaster when it comes to the chances on the market. I think it's best visible here, and we can clearly see that coming into the week, the chances reached 50%. Then Starmer survived the first crisis. They went as low as 18. Then there was another crisis and resignation from the cabinet. Once again, Starmer survived. Then he got some bounce back, and ultimately now the chances went back up again, because there is a rumor in British media that Starmer's resignation is imminent. I wouldn't be shocked if it happens. Generally speaking, for a politician that had faced so many problems for such a long time, it's no shocker that at some point he would just resign. And I would say that this is just a matter of time at this point. I think the traders agree here. 66% chance by end of June, 88% chance by the end of December. This is almost Bond's territory at this point. So there's no hope for Keir Starmer. There is only time. So I think it's quite wise to end this UK politics analysis by looking at who can be the next prime minister. And as you can see, there are a few contenders in the recent day or two, Andy Burnham reached the favorite spot. He's rumored to have wide support in the party. He's, I think, currently the mayor of Greater Manchester, but he's also looking to enter the parliament in the by-election in June. Probably, if it happens, it will basically mean he's the PM. But we also know that Wes Streeting, so the ex-cabinet member, which also has been popular in the party, is looking to challenge for the job. And there's also Angela Rayner, and being honest, I don't know yet who she is in the UK politics. But surely I will be looking to enter this market. I think it's a very dynamic situation. A lot can change, especially since Starmer can also hang on for a bit longer. So this will definitely be a market to watch in the coming weeks as the situation in the UK politics develops. These tend to be volatile, especially in the UK, as the UK politics in general tends to be pretty volatile. So definitely an interesting situation. I'll be also interested to see what platform different new candidates choose to, let's say, campaign on, as the UK faces many issues, from the economic stagnation to the migrants problem to handling the Iran war, the relation with the US, and the rise internally in the UK of the right wing. So a new leader would definitely need to show to the party and to the voters that they have a plan to face all those challenges and emerge stronger. This will be one of the most interesting, I would say, situations in European politics in the coming weeks. All right. This is all for today. I think that, especially in those volatile times, analyzing global events through prediction markets gives plenty of clarity, because as you can see, we can just put up 3 or 4 markets next to each other and have a very good understanding of the current situation and what is the forecast. This was especially clear with the Iran war, where analyzing the 3 markets together, we can actually see what is the most probable course or path going forward. And this is also helpful in trying to analyze if an event was a success or a failure. So this is the China visit case, in which we clearly saw that expectations were high and the resulting outcomes were not really great. So if you do look at the markets, you have way better understanding of what's going on. You're more immune to propaganda, to misinformation, disinformation, and you can also very quickly get up to speed with what's happening, because you can just look at the chart, understand all the swings of the price, match them with what's been happening, and you have very clear, high-level picture of developments, even throughout many months. So that's all for today. If you like the video, click the thumbs up button, click that subscribe button. It'll help spread prediction market analysis forward. And if you're interested in day-to-day takes, go visit my X profile, where I post daily on prediction markets and global events. And if you're interested in prediction markets related deep dives, analysis, research pieces on the global events, go on my Substack on profitnotes.com, where I publish at least a couple of articles a week on the global events and prediction market industry. So thank you for watching, and see you next week for another round of Profit Talks.